we know the name, Tesla, solar, any solar companies, those are obvious ESG plays. Are there under the radar companies that are actually ESG and we're not aware of it?
Good evening, Brian. Well, actually, to your point, yes, we know solar, but actually solar and the renewable energy space has been under-owned as far as our analysis is concerned by most ESG investors. And we're only really seeing that change towards the end of last year when solar pretty much around the world was starting to make inroads into the key holdings of investors. I think when it comes to under-owned areas, what we find is that water technology companies, building energy efficiency companies, those are areas green-related that still have to make inroads into the most popular holdings.
Looking at the list, there are some names that make sense. Looking at the list, there are some names that don't. You've got Cummins, the engine maker, UPS. They got a lot of trucks and even more planes. How are those ESG plays?
I think there's two things to bear in mind. One is that historically speaking, ESG investors pretty much had a exclusion approach. So they didn't want to touch anything that was remotely, if you like, brown or dirty. And I think what we find more recently is that the debate is moving towards engagement, is trying to move companies along. Cummins is an interesting story where actually the hydrogen business is starting to develop. The company is changing its business mix. And I think what investors are looking for are companies that are not necessarily today's ESG winners, but actually tomorrow's ESG winners, because typically the market tends to underappreciate the change. It is very well and very good in identifying companies that already score good, necessarily very good at identifying who is good tomorrow.
Well, that's a really important and interesting point. And by the way, looking at your list, some of the names also that are maybe sort of either future or sideways ESG, you got McCormick, the spice company, you got Lowe's, you've got Nike on the list as well. Let me flip it, Eugene. Are there companies that have been overbought, overplayed, and they're just getting bought because they're ESG, but maybe the business isn't worth now as much as the stock implies?
Well, I mean, when we look at the key holdings of circa 113 dedicated ESG funds that we track, what is remarkable is that the key holdings are the sort of who's who in the tech space and probably the pharma space. And I think some of that is due to the fact that ESG data tends to be readily available for larger companies, whereas smaller and medium-sized companies tend to have a tougher time generating the data that's needed for investors to analyze companies from an ESG perspective. Over time, our view is that the mega cap tech space and the mega cap pharma space is likely to start to lose out when data becomes more available for smaller sized companies. So I think in terms of dynamics, what our report clearly showed was that over the last couple of months, particularly on some of the tech names, we've seen investors cool off a bit. So you're talking names like Visa, MasterCard, but also the likes of Texas Instruments, for example, even in Amazon to some degree.
Shepard Smith here. Thanks for watching CNBC on YouTube.